Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look now at some of the individual stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we're joined by Bloomberg's Tatiana Darrier. Tatiana, what are you looking at today?
Well, Paul, got to look at Palantir again, up here 8%, the second largest mover in the S&P 500 right now, after reporting a 48% surge in revenue, and it was growth across segments. Revenue from government, the government segment climbed 53% above estimates, and what analysts are most excited about, though, is the commercial segment and growth there. That revenue has grown by about 93% for the year, and in analyst views, this is a key indicator of robust demand for their AI systems. The stock here up 8%, up more than 120% year to date. The fifth largest contributor to S&P 500 gains, so it's no longer just a retail favorite. This is becoming a bigger force for the S&P 500 as a whole.
Well, yeah, especially with all their government contracts that you were talking about, too. Huge for them. Okay, let's move on to Caterpillar, because a lot of people look at this, it's kind of like this bellwether for the economy.
Exactly. A big macro name. Shares are pairing drop. They're dropped now. They're about flat or slightly lower by 0.3%. A miss on EPS results as tariffs are biting into profitability. The company projected a net impact from incremental tariffs of over $1 billion, somewhere between 1.3 to 1.5. Baird estimates that levies are now dragging margins by about 200 to 300 basis points. So that's why their guidance is coming at the low end of their guidance for margins, even though they're projecting growth in their annual sales. So that's kind of an interesting, because it sort of goes against what we've seen with industrials, where analysts are saying that they do retain some of the pricing power, where for Caterpillar, it doesn't appear to be the case.
Yeah, it's interesting. You would think if somebody would have some pricing power, it would be somebody with a brand name as strong as Caterpillar and a global name, but it's impacting all types of companies here. Hims and Hers.
Hims and Hers, interesting name. Saw a total reversal here over the past hour. You know, it was down about 14% in the pre-market. Now is about flat. Analysts and investors are reconsidering their results. It posted a second quarter revenue miss, and sort of the weakness stems from their weight loss drug sales. And the story here is that this stock has risen a lot, more than 160% this year, because they've been selling copycat versions of the popular weight loss drugs from Eli Lilly, Novo Nordisk. Now the FDA came out earlier this year and said, stop selling copycats. We don't want them on the market.
I never understood why I guess they allowed it, because the Ozempics of the world were in short supply. So they allowed kind of these knockoffs to kind of go to the market. Is that kind of what happened?
Exactly, Paul. They're in high demand everywhere, even abroad. And now Jeffrey's saying that perhaps investors are overlooking other positives in the numbers, like the second quarter EBITDA beat, and the fact that they're going to launch a hormonal health, sort of are pivoting away from weight loss to hormonal therapies and expanding into other places like Canada. But I feel like my theory is that it just goes up, or Palantir here lifting all boats, weight loss, AI, all popular things.
Well, it's funny because they had that partnership with Novo Nordisk for Wegovy at the discount, and then that just didn't work out very well for them.
No, not at all. With the Novo Nordisk, they're accusing them of illegal mass compounding and quote deceptive.
It's the compounding. So these aren't. They're not. I'm trying to think. They're not knockoffs. They're compounds, I think is the term, and they kind of get you very, very, very close to the original drug, but not all there.
Yeah, and price is key, right?
Yes.
It's more affordable and more accessible for people. Well, the next name here in the healthcare space is Vertex, down about 17%. It has extended losses here from the pre-market. The story there is that the FDA came out and said that one of their pain pills doesn't have, or it doesn't see a path future for broad use in treating a certain type of chronic pain. This is a big one for them because they've been trying to pivot their business away from cystic fibrosis. And this is the first type of painkiller to reach the U.S. market in more than 2 decades. So it's a big one for them. They're studying it in various different uses. For this particular use, for chronic pain caused for nerve damage, the FDA is saying that it doesn't see a path forward, and that is knocking the stock off here, down 17%. Your ticker is VRTX.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.